Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, this is the channel for you. Click subscribe. Give me a thumbs up button if you like this. So I did a presentation for new investors. These are people who don't have any experience investing, because I'm getting some questions. I'm going to go in here through this presentation for new investors. So new investors, one, welcome to the channel. And if you don't know anything, that is okay. First, you need to start by opening a brokerage account if you want to invest in stock equities. Fidelity, Robinhood, Charles Schwab, TD Ameritrade, it doesn't matter which one, each has its benefits and drawbacks. So once you open a brokerage account online and you're ready to invest, what are some of the most important things to know when investing? But first, I'm going to go over the account types. You've got an individual account, a Roth IRA, a 401k, you've got all these things. An individual account is a taxable account and can be withdrawn. Your money can be withdrawn back out of that account without any limitations at any time. You would want to use this account for money that you need before retirement. Now, if you don't need the money before retirement, I think it's very advantageous to open up a Roth IRA, which is you use after-tax money that you put into a Roth IRA, you put it into that account where the earnings can grow and can be taken out during retirement tax-free. You can take Roth IRA contributions out before retirement if it's in the account, I think for 3 or 5 years in duration. You can take it out if you're buying a house or if you're buying certain things. So you can put it in there and you can take your contributions amount after a certain time frame without any penalty. A 401k is usually a retirement savings plan typically established by an employer and also has withdrawal age requirements for retirement. And then you've got what you can open up in addition to the individual account, which is linked to the individual account, is you can have a margin account. It's an account tacked onto your individual account to be able to borrow money to invest. And you can also do options, which is an account for options trading. Margin and options trading is typically for experienced investors, and I do not recommend those accounts for people that are just starting out. Now, you're going to have to fund the account with something. So next, you need to fund the account with usually from a bank. So typically, you link your bank account to a brokerage, and then you transfer the funds into the account through an electronic transfer, typically. And there's a period where the money settles into the account, and then you're able to perform transactions. Some accounts have limitations on income, like a Roth IRA, and they also have limitations on how much you can put into the account per year. I think it's $6,000 this year or $6,500, I can't remember. I find that having money in all sorts of these accounts keeps you ready for emergencies if you need money. So I think it's okay to open up a Roth IRA, have a 401k, and also have an individual account where you can draw money out of very easily. So one thing I want to touch on are buy orders for stocks. So if you're completely new and you've never put in a buy order, what I do is I use limit orders for my stock purchases. It's called a buy limit order. And you put in the limit price, that's the price that you want to purchase it for, and however many shares, and that's what that order is going to go in for. If it doesn't fill, you can always adjust and modify the order upwards, basically raising the limit order to the buy or ask price and see if it fills. And you can continue to modify that limit order if it doesn't fill until it fills. I do this because more illiquid companies can have very wide spreads between the bid and ask price. And sometimes an order can get filled much higher than the last quoted traded stock price. So if its last price was 20 cents a share and you put in an open market order, sometimes it'll fill at like 45 cents a share because that's the closest ask price. So you really didn't get a very good deal. You could have put a limit order in there and get a much cheaper price. It just takes a little bit longer to fill. Limit orders prevent this from happening, from filling some ridiculous amount higher. So how do you find investments? That's a good question. You can use stock screener tools for finding potential investments through your brokerage account. You can search for companies on Google. You can find portfolios of successful investors and look at the companies they own on a Google search. Maybe like a Ray Dalio or Warren Buffett or Eric Sprott. They're all billionaires who you can find their portfolios and find companies that they own. You can follow billionaires who invest in sectors that you like and copy them. You can subscribe to this channel and learn about companies and sectors through this channel. So researching investments, obviously you want to do that. Look at the corporate presentations on the company's website. That's where I go to get my information, is right directly on the company's websites. I use Google Finance to find information about the company's stock, price, or market cap. Market cap is just how big the company is. You can also research mutual funds or ETFs using their websites. What sectors or companies do they hold if you're looking at a specific mutual fund or exchange traded fund? This is one of the most important steps of the process to gain confidence in your investment, is the researching of your investment. The more research you put into it, the more you'll get out of your investment. The less you put in, the more problematic it could be in the future if you don't put any time or effort into it. Now, I prefer cost averaging into a position, and what that means is once you've funded the account and you find the companies that you like or the mutual funds or the ETFs, you're going to have to purchase those investments through your brokerage account. I recommend cost averaging into and out of investment. Dollar cost averaging is an investment strategy that aims to reduce the impact of volatility on large purchases of financial assets such as equities. Dollar cost averaging has been proven to reduce risk and improve performance than a lump sum all at once investment. So after investing, you finally went in and you invested money into a company or a mutual fund or an ETF. Investment prices, values move around a lot and can be an emotional roller coaster. It is important to research your investments well to gain the confidence to hold on when markets fluctuate. Develop an investment strategy and stick to the strategy. If the strategy is bad, refine it over time and change it. No strategy is not a strategy. And it's going to require patience. Making money most of the time requires patience. Companies need to grow, and that takes time. It just doesn't happen at a, snap of a finger. The fastest way to make more money is to learn more about investing. Market conditions and value can accelerate your investment returns by strategically positioning investments in front of changing market conditions. This takes financial education, and the reason I set up this channel is exactly for positioning for changing market conditions. And there all are alternative investments. You don't have to just look at stocks and bonds and stuff like that. You can do physical precious metals. I implement ratio investing to increase wealth and to increase ounces in my portfolio. You can also go into real estate, and you're going to have to understand the real estate cycle. You can do collector cars. You can do fine art. There's a whole bunch of things that you can invest in. It doesn't have to be just stocks and equities. And what's next is this is the first part of a series that I'm going to release. Next is developing an investment strategy. It is critical to being successful with your investment. And I will go over what's important with developing an investment strategy. This is just the beginning of getting started, of opening up an account, get a brokerage account, put money in the brokerage account, being able to figure out how to buy something with a limit order, figuring out how to just look at some stocks, look at ETFs, look at mutual funds. This is just the very beginning. I'll go over investment strategy and a whole bunch of other things to get you started if you're a brand new investor. If you like this content, subscribe to the channel, give me a thumbs up. I'll walk you through the steps of what it takes to get invested and to be more comfortable with equities and stocks and precious metals. Thank you for listening. This is Finding Value.